A 40% market crash is possible for stocks, which means it's basically an extinction level event for your altcoin bags. This is according to the Bank of America, one of the largest banks in the world. And of course, they're wrong on plenty of stuff before, but the bank's strategists believe that we are mirroring what happened to the bubbles of the 1960s and the 1990s. So is it time to panic and sell everything up? Well, let's look at the facts. And at the end of this video, I'll let you know how I think this is going to be affecting crypto specifically. Now, before we analyze how this is going to affect Bitcoin and dog coins and dino coins and all the other stuff, let's take a trip in the past, because you have to understand the context to understand what comes next. In the late 1960s, early 1970s, a time when bell bottoms and tie-dye shirts were all the coolest innovations back in the day, our parents were all hanging out, getting high, a group of about 50 large cap stocks on the New York Stock Exchange became the darlings for investors. Now, these stocks became known as the Nifty 50. They were considered to be solid buy and hold growth stocks, safe plays. Never anything safe in markets is. They're often referred to as blue chip stocks. Think of them as the Avengers of the stock market. Strong, dependable, always kind of there. They keep making them. Literally no one could defeat them, right? They were riding high on euphoria. These superstar stocks had strong earnings, high price to earnings ratios. Everybody was getting hilariously rich until they weren't. Some of the prominent Nifty 50 stocks did include companies like Coca-Cola, IBM, Johnson & Johnson, McDonald's, Walt Disney. Companies, of course, went on to see major success later on. So people felt like there was no way you could lose. They just kept piling money into them. But of course, can always lose. Something went wrong. In 1973, a series of events led to a market downturn, the collapse of the Bretton Woods system, the 1973 oil crisis, moving off the gold standard in 71, rising inflation all contributed to the worst market downturn since the Great Depression. It was as if someone just snapped their fingers and it was over. The bubble burst and things went to absolute shit. Investors lost a lot of money. Now, we always say history does not repeat, but it does tend to rhyme. We're worried about the rhyming factor here. The next event that rhymed was the tech bubble of the late 1990s and the early 2000s. You see, just like the Nifty 50, the dot-com stocks were the new heroes. It's the new big thing. Everybody's getting hilariously rich, investing in pets.com and all this other stuff, right? The promises of internet-driven riches drove investors crazy. Investors threw money at any company that had a .com in the name. You probably know this history, but it's important again for the context what we're about to talk about next. They did it just like they did with the Nifty 50 decades before. The NASDAQ soared to new heights, and it seemed like the party would simply never end. Well, until it did, because we all know what happened next. The bubble burst, wiped out an estimated $5 trillion from the market. Now, fast forward a couple of decades, and here we are again facing a worryingly similar situation. The market's thriving. The S&P 500's really never been better. It's only down a few percentage points from its all-time highs. There have been all these predictions of recessions, but for some reason, the market kept ignoring it. Recession never came. GDP stayed good. Everything kind of stayed okay. And we kind of find ourselves right now in a Goldilocks scenario for the economy, assuming that inflation doesn't spike, but there's a lot of fears that it could. The hot market right now is primarily attributed to AI, much like the Nifty 50 in the 60s and 70s or the dot-com boom. Today's AI-driven stocks are seen as the titans of the market, right? NVIDIA and other players like that. Just as investors back then placed their faith in blue chip companies, today's investors are not betting on 50, but on 7, the magnificent 7. These tech stocks, mega cap stocks, many worth trillions, it's crazy. Some of these are worth the GDPs of most countries out there. It's crazy. Anyway, it's led to crazy market rallies and to some extent rallies in the crypto space as well, benefiting from that broader risk-on attitude. Now, instead of Coca-Cola and Johnson & Johnson, investors have been fleeing to tech giants, Microsoft, NVIDIA, Google, and also just like the dot-com bubble, we see a lot of startups and even established companies which are keen to make sure that everyone knows that they are into AI. It's the hot new thing, AI crypto coins. Every company's pivoting to AI. It doesn't matter if your business is really into AI or really actually a tech-focused company. It's basically just the hot thing right now. Rebranding a company named to something like laundromat.ai. Yeah, sounds like a good marketing strategy, right? Oh, but their washing machines must do really fancy stuff with AI. Now, before we talk about how all of this is going to inevitably affect crypto, because we are definitely trading as a proxy to the stock market, as well as a key warning from a very famous billionaire investor, I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs, and currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account, and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. So look, the crypto industry is no different, with established projects rebranding to include AI and AI agents becoming mainstream, even launching and shilling their own tokens. It's been pretty crazy. CoinGecko is now listing 634 AI-related projects and counting. Just like any bubble, we're blowing more air into a balloon that might be nearing its limits. Now, aside from the obvious parallelism, Bank of America also pointed out that a few big stocks right now dominate the market, which is higher than usual and creates a lot of top-heavy, top-side risk. The top 5 S&P stocks alone make up 26.4% of the index. People are putting money into index funds that include these stocks. They don't really think about it. They all buy the S&P 500. I get 500 stocks. Yeah, but like quarter of what you're buying is just the top 5 stocks. People don't realize that. They don't actually think about the actual value of what's going on here. To make it clear, imagine this. Let's say there are 5 super popular ice cream flavors that everyone loves. Well, people start buying these flavors in bulk, not because they like them, but because everyone else is buying them, right? Soon these 5 flavors end up dominating the market. Oh, sure, there's other flavors out there still, but those aren't hot. That's not what everybody wants. However, if suddenly everybody stops buying these flavors, the ice cream market could crash. The producers have all overproduced the top 5 flavors. Now nobody wants it. Everyone wants to go and have passion fruit ice cream again. Similarly, if the top tech stocks drop, it could drag the entire market down. And Bank of America is not alone in their pessimistic prediction for stocks in 2025. Billionaire and hedge fund manager Steve Cohen is feeling negative about the U.S. economy right now. He said that U.S. growth is likely to slow in the second half of the year as tariffs, strict immigration laws, and government cost cuttings are all going to start weighing down the economy. So, should you care as a cryptocurrency investor? Well, you're probably watching the markets crash this week and thinking, yeah, I probably should care. Well, let's entertain the scenario that the big crash is imminent for stocks. Well, what will happen? I would imagine that big red candles will dominate the S&P 500, particularly for the Magnificent Seven, and the broader crypto market will follow suit even more. To an extent, you might even say that the crypto market has been front-running this kind of fear. Now, in market turmoil, risk on assets like crypto and stocks, particularly tech stocks, are usually the first casualties. And you can see the responsiveness of crypto. It's a 24/7, 365 market, unlike stocks, so it tends to react earlier. It's usually the canary in the coal mine. Now, investors, of course, are going to run to gold and bonds and cash. And if you're on a high leverage trade, pray you have a tight stop loss, or you could see your position liquidated. Remember, the market can stay irrational longer than you can remain solvent. Now, if you just bought the latest, I don't know, dinosaur with hat coin, you're probably going to lose a boatload of money. It could be a full-on trip to Goblin Town if the Bank of America and Steve Cohen are right. Of course, nobody knows the exact date that any of this will happen, and they could be early to their assessment. It might be a year before that happens. So we're just guessing. And I agree that we're going to see a crash where, well, a lot of coins, particularly in crypto, are simply never going to recover. Maybe that, to an extent, that crash is already happening. Some of these AI coins and meme coins are literally never going to come back. Some of the stronger cryptos will, but they could still see further downside. However, I think we still have time in the cycle. I could be wrong. The 4-year cycle does align more broadly with Cohen's prediction that the slowdown will happen in the second half of the year. To what extent markets front run that possibility? Who knows? We probably have a few more months, hopefully. But now is not the time to close your eyes and just randomly pick small cap coins, hoping for the best. Instead, use what we hope are going to be the last few months of the cryptocurrency market cycle. Hopefully, of course, seeing still some positive price action later in Q1, only 1 month left, or into Q2. But anyway, I will cut all of my altcoins when the time comes. I think the market has adequately invalidated my bullish thesis. I'll cut at a loss. If it goes up adequately, I'm going to cut at a profit. Regardless, when we really have confirmation of a bear market coming, there's no reason to hold any of this crap. Okay. Now look, Bitcoin will always be the smart bet long term. If you can think out, okay, 10 years time, where is it going to be? Well, don't expect 100x return, but 10x return in 10 years for Bitcoin is probably pretty on point. In 5 to 10 years, these prices we're seeing now, probably going to be a bargain. Doesn't mean you don't get better prices in the near future, but still long-term thinking. I also have to remind you that once the bear market comes, you're going to want to have a lot of dry powder to scoop up some promising coins, which I know if you haven't taken any profits up to this point, might be tricky, especially if we are entering into a bear market earlier than expected, especially for the crypto markets, because after the dust settles, the Fed will probably flood the market with money to stimulate the economy like they always do when the next cycle starts. You want to be ready to position yourself to ride the waves instead of just watching from the sidelines. So again, make sure you've got money available to buy cheap assets. Don't go hardcore down the risk spectrum here. You can buy, when markets crash adequately, you can buy relatively good assets for pretty good prices without taking huge amounts of risk. So yeah, look, I know crypto markets have been pretty rough this week, and the big stock market crash might not happen tomorrow. That would suck, but it will come. So instead of being afraid, change your perspective. Look for opportunities, right? This coming market crash, the AI bubble imploding, might actually be one of your best chances to build intergenerational wealth. Think about that. Now, legendary investor Sir John Templeton, he said it best. For those properly prepared, the bear market is not only a calamity, but an opportunity. Keep that in mind. Thanks for watching.